Property Patriot, you are cleared hot.
Good morning, high flyer. Welcome to the AMI podcast. Today we're talking to Marc Weisi. Marc was a Wall Street professional who ventured into real estate in 2016 to diversify his investments. Start with residential properties in North New Jersey. Marc soon discovered the real potential of real estate. He doubled down and transitioned into multifamily and larger commercial deals. He and his partner tackled a daunting issue with an oil tank that scared off other buyers. Providing that the right expertise can turn challenges into opportunities, learn how Marc navigates both Wall Street and the real estate market. Hear about all that and more, where we provide real estate investors the tools to achieve generational wealth. This is the AIM Podcast, show number 46. Good day, high flyers. Welcome to the AIM Podcast. Today I'm joined by Marc Weisi. Marc, how are you today?
Doing splendid. Thank you so much for having me, bud.
Yeah, I enjoyed our conversation about your last name because it's very different. I have some friends who would pronounce that W with a V and some friends who would pronounce that W as a W. So I appreciate your patience.
Absolutely. Yeah, I always tell people, call me whatever you want. I prefer handsome or intelligent, but Weisi works.
Excellent. Marc, would you do me a favor and give me a quick introduction?
Absolutely. My name is Marc Weisi, as you said. I'm based here in the Northeast, in northern New Jersey, right across from New York City. Came up doing residential in around 2016. I had been working on Wall Street, still work my W-2 on Wall Street, and decided to put a little bit of my eggs into a different basket outside of kind of a lot of the stuff that we all learn, 401k, stocks, bonds, all of that stuff, and diversify into real estate. And after not too long, I started realizing, wow, this is working, and decided to put a little bit more eggs in that basket. And so over the last few years, I went from residential to meeting my partner, and then we got into multifamily and now doing larger commercial multifamily deals.
Excellent. How many doors are you up to right now?
About 105.
That's fantastic, man. Right? Making that jump from single family to commercial really benefits you, right?
Absolutely. Yeah. Scale gets rewarded.
Great. Let's talk about your first deal. How did you start?
Yeah, so the first deal that we did together, myself and my partner, was a duplex here in Newark, New Jersey, that we had identified. It had been on the market for a little while, and we weren't sure what was the issue there. And we put an offer in, and we found out shortly thereafter that it was an issue with an oil tank. And I guess for whatever reason at that time, that was scaring a lot of people out of buying. But being my partner's background with construction management and things like that, it wasn't something that we were that scared of.
Yeah, I've run into a few oil tanks. Welcome to New Jersey. I lived in Pennsylvania. Everybody had a basement. If they had an oil tank, it was in the basement. In New Jersey, for some reason, they decided to bury them all. I don't know why. Right.
Exactly.
So how did that first duplex turn out?
Yeah, so we bought it with hard money. The BRRRR strategy is what we were shooting for. So we bought it around 220, I want to say. We put about 50K into it. We did a lot of the work ourselves. So we were going from our W-2 jobs around 5 o'clock, leaving there and going to the new office, which was this property. And we would work there until late into the night and then go home and repeat it all over again. So we did that for a number of months, finally got it done. And we went to go refi out. It didn't appraise for as high as we thought we would, but all these tough times you go through or the unexpected surprises, they're all opportunities for learning. And so we didn't get the appraisal we wanted. We were able to get into some good debt and cash flow the property there. And today it's still cash flowing. We're actually looking to exit that deal because it's appreciated quite a bit more than I think anybody on our side really expected.
Yeah. I think everybody's had that problem over the last 3 years. It's not a bad problem to have. Oh, gee, I'm sorry. My property appraised 22% per year over the last 3 years. Never horrible.
For sure.
So everybody's got the nightmare, right? What was yours?
Yeah. So a little bit of a different story or a different deal. As we were getting some modest success in the smaller multifamily, we tried to do a little bit of a reflection on ourselves and where we wanted to go and how to get there. And we saw that while we could continue having these small successes, we wanted to scale up, and doing these wasn't going to get us there fast enough. And we got into a couple of different coaching programs. We started investing in other people's deals. And one of the deals that we invested early on in as a passive investment, about a year into it, it became very apparent that we had invested with a sponsor that really wasn't doing the right thing, wasn't doing right by us as investors and the other LPs on the deal. And that was a really tough situation to go through. We're still working our way out of that situation 5 years later into the deal, but it was, again, another opportunity for us to learn and grow.
Yeah, I won't make you go too much into that. I don't know if there are legal ramifications that are still pending on something like that, but jumping into an LP, we all know about what happened down in Houston. I know this is going to air in a couple of months, but with the 3,000 doors that were basically foreclosed on, that a lot of people lost money on that deal. That's unfortunate. So how did you recover?
Yeah, absolutely. I'm happy to share whatever I can on that particular deal. The way we chose to respond, because it's not often what happens, it's how you respond to it. And the way that we chose to respond was by rolling up our sleeves and actually getting involved, taking an active stand in our investment to protect our investment and the investment of others in the deal. And I was going thankfully, this was in a nearby market in Philly. And so I was going down there twice, 3 times a week, sometimes, to oversee the construction on this property. My partner was getting involved in terms of overseeing vendors as well. And so we nursed it back to health to whatever degree we could. We stabilized the property. And at that point, once we had it running somewhat well, then we went to the legal course in terms of trying to get ourselves out of the situation. But the first order was really just trying to stabilize things there.
Excellent. So working together to achieve a common goal and then deal with the problem later?
Absolutely. And while it's not something that I would wish on anybody else, there was a lot of heartache, a lot of long nights there. And we were basically handed a lemon with no budget there. It's not something that I'd want to go through again, but looking back on it, it was something that really built the confidence in us to say, hey, we can do this. That was a 5-unit property. At the time, we had only ever done, I think the biggest was a duplex, triplex. So it was a step up in terms of size. And so we're like, okay, if we can do this, imagine what we can do if we go into even bigger projects and start out with an adequate budget. So it was a lot of a learning, it was kind of tuition, I guess you could call it, in terms of how to run commercial size multifamily.
Yeah, that's a great way to look at it. When you're taking a loss like that, you can look at it as though I'm taking a loss and be negative about it, or you can look at it like it's a huge education. And I love the fact that you said that it was a lemon because you took it and made lemonade.
For sure.
So what are you currently working on?
Yeah, so over the last few years, from that experience, a couple of other LPs that we were in, we built up a pretty good understanding of how larger deals get done, and incrementally got more and more into the pilot seat, so to speak. And so we started doing our own deals back in 2021, both on the syndication basis and then also doing joint ventures. And so we now have a portfolio out of state, pretty decently sized portfolio out of state, where we're looking to continue to grow that, looking at multifamily properties anywhere from 10 units on up to about 100 units, staying below the, I guess you would say, institutional size buy box, and looking primarily in the Midwest and also the Southeast markets that we know and where we have local boots on the ground.
Excellent. So the markets that you're currently looking at, obviously based on the market and the location that you're currently in, you've got to have better returns. It's got to be a lot more affordable. Yeah,
absolutely. This kind of dovetails a little bit with my W-2 background. As I mentioned, I work on Wall Street even to this day, and my particular asset class is municipal bonds. So for people who don't know, that's city and state debt. So we're looking at local and regional economies and trying to understand what are the drivers of this economy and how is it going to prosper, or is it going sideways, and so on. And so a lot of the same data that I have looked at throughout my career are a lot of the same data points that we look at as real estate investors. And so that's helped us in terms of identifying markets where we want to be. And so that's where we choose to focus, a lot of those growing markets.
Yeah, great. That's a fantastic position to be in. So is retirement on the horizon?
Yeah, that's a great question. I think retirement, I guess it means a little bit different, I think, in our community than probably the most people off the average American. So in terms of retirement, as far as walking away from the W-2, we'll get there. It's not on the immediate horizon, but right now I'm having a fun time kind of juggling the two. It's not yet to a point where I need to walk away from my W-2. And frankly, I look at my W-2 now as supporting the real estate, whereas in years past, it was maybe the other way around, where real estate was really this retirement fund in essence. Now it's a lot more of, okay, my business is my primary concern, and the W-2 is great. I still put in the time and all my effort there, but it's really my focus is on continuing to help us to scale.
Yeah, great point. The funny part about retirement is because having done that and actually pulled the trigger, I found myself working harder post-retirement than I did when I was working the job and real estate was the side hustle.
For sure. Yeah. I think we all want to be our own boss, but we might not have a full understanding of what that entails until we walk away.
What's your goal? Is there a specific number of units? Is there a specific amount?
Yeah. So I have a cash flow goal basically that I have set for myself, where once I reach that goal, I'd be comfortable kind of leaving my W-2. And I'm definitely on my path there. Beyond that, it's a little bit more of a qualitative goal where we want to impact in a positive sense as many people, tenants, our investors, as well as the people that we frankly do business with, whether that's property managers, lenders, and so on, all the different team members. We want to just have a really transformational set of relationships as opposed to transactional. And that's really the bigger aim of our business, is building communities through building wealth.
Great point too. The transactional versus transformative versus transactional relationships is the way to be. So what is one thing that you learned as your wealth increased?
Yeah, I think the one thing that's been a constant lesson for me is sometimes as your net worth goes up, you get distracted by shiny object syndrome. You have more opportunities that come your way. It's just the universe throws more at you as you've, developed a little bit of success. And so it becomes a little bit more difficult. I find myself saying no a lot more today than maybe I would have just a few years ago. And so I know Warren Buffett has said this, where you say no way more than you ever say yes. And that's an indicator of success. And so that's what I'm having to do a lot more today, is just pull myself out of what may be a shiny object, basically.
And watch out for we'll get you 100% return on investment and a 5x multiple in 3 years.
For sure. I think real risk comes from not knowing what you're doing. And so if you're investing in things that you don't really understand how they work, it's probably a recipe for disaster.
That's why I don't reply to the Bitcoin DMs all the time. I'll cut that out. But I get 30 of those things a day. Hey, have you thought about crypto? Yes, I have. And no, I'm not.
I almost did it about a year or so back. I almost pulled the trigger on a Bitcoin mine. I'm so glad I didn't fall victim to that, actually.
Yeah. Oh, man. It's a whole other story. I just won't go down. But yeah, I know so many people who got taken by Ponzi schemes.
Wow. So hard to hear.
Yeah, man. Are you ready to take your real estate investment sky high? Aim High REI is the perfect Facebook community for you. Get answers from experienced investors, connect with other motivated individuals, and benefit from valuable resources all in one place. If that sounds like something that interests you, join our amazing network today, where we'll help you evaluate your investing journey beyond what you think is possible. Aim High REI is on Facebook, or click on the link in the show notes. The best part, it's completely free to join. Today, we're going to go into the soaring four. These are the same 4 questions that I ask every guest that can help someone achieve new heights. So first is, what do you use to keep you motivated?
Yeah, I think, frankly, my partner and partners really on our deals, they are what really keeps me going. Seeing them day in and day out, put the work in, and with the idea that they want to improve the lives of their families and their legacy, I think that's, frankly, all the motivation that anybody really needs, is trying to improve the situation for somebody that you really love and care about.
Yeah, great point. What My goodness, again, I've been talking since 9 o'clock this morning. And so it's been brutal.
Yeah.
What's one thing that you learned that completely changed your mindset?
Yeah, I think it's, to quote the book, Who Not How, it's about the individuals as opposed to how sexy the deal is. You start by finding the right people, and I think your journey will be a lot easier in terms of avoiding some of the pitfalls and making good investments. So I would say find individuals that you want to be like and that have the experience, and try to be of service to them.
That was a difficult concept for me to grasp. How easy was it for you to jump into that?
Very difficult. When I was starting out, I wanted to do everything myself. I wanted to basically be running the show, and it's sometimes hard. I think, especially in our community of anybody with an entrepreneurial spirit, it's like when you're starting out, it's the IMO mentality. I think Jake and Gino call it, where you're going to do everything. And so you see that's maybe holding yourself back a little bit, and that really empowering others to be the different pieces in your puzzle. I think that'll get you going a lot further and a lot faster than you would otherwise.
Yeah, we just had Gino on a few episodes ago. At this point, it's about a month and a half ago. But yeah, fantastic point. That delegation is hard to do when you're just starting out. Network is your net worth, and delegating is key.
For sure.
Yeah. What tools do you use to keep you on track?
Yeah, so a couple of years ago, I had been referred to this tool. It was called the Productivity Planner. Mm-hmm. And it was basically a weekly planner. It took you through a series of exercises where you came up with longer term goals, and you walk those back to, okay, what are the things I need to do today to reach those? And so I developed my own kind of version of that productivity planner, where every week I sit down every Sunday, I assess where I've been over the previous week, whether I was able to accomplish everything I set out to, just reflecting on that. And then developing a really solid plan for the coming week. And then every day I'm matching up what am I doing on what are the 3 or 4 things that I'm trying to absolutely get done, no matter what distractions come my way, and constantly coming back and revisiting those. And so I think that's really helped me in terms of prioritizing. One of my issues has always been, I guess, maybe a little bit of an ADHD disposition there, where something comes my way, I get distracted, and I tend to fall victim to the whirlwind. So that's been a game changer for me.
Yeah, like the duck on the pond, right? You look like you're really calm, but underneath your little feet are churning like there's no tomorrow. I got you, man.
For sure. Yeah, I think sometimes we confuse activity for productivity, and those two are actually different things entirely.
Entirely, absolutely. What is one thing that you would change if you had to start all over?
Yeah, I think I would have probably partnered with the right people earlier. As we mentioned earlier, I was hesitant to give away the reins and give away equity early on in some of the smaller stuff. And then the year that I met my partner, we supercharged our growth by bringing complementary skill sets to one another. So I would have started with partner much earlier.
Yeah. Do you guys follow the VI model, EOS, or any other type of system?
Yeah, that's another thing that I wish we had started earlier, actually. It's a great point. EOS is the one that we've chosen to employ. But if I had known about that back then, who knows where we would be now.
Right. And it's funny because I get a lot of students, clients, when they're trying to expand and they want to scale, and when they find out what the cost is of hiring somebody that can help you or consult on your business and bring you to that next level, they're like, oh my goodness, that's so expensive. It's just one of those things, right? Is it? What if the $10,000 a month brings you $1 million by the end of the year?
Totally. I had seen somebody present it that way. Exactly. It's imagine making $1 million next year and then subtract what you made this year. And then that's the cost of inaction in terms of not putting those pieces in place.
Yeah. And we're in the process of enacting that right now. So yeah, great call on the EOS model. All right. Marc, if someone wanted to get in touch with you, how would they do that?
Yeah, absolutely. So reach out to me. My email is marc, M-A-R-C, @investwithmaple.com, just how it sounds. Our website is investwithmaple.com as well. And then you can find me on all the social platforms, in Instagram and Facebook, are the ones where I'm the most active. My name on there is spelled Marc, and last name is Weisi. I'm out there talking about what I'm doing, but really what I love probably more so than anything else in the business is helping others who are maybe earlier on in their journey. The modest amount of success that I've had and my partner has had in this business is really due a lot, in large part, to the people that helped us along the way. So definitely want to pay that forward.
Terrific. Marc, I thank you for your time. All your information will be down in the show notes. Thank you for coming on. I appreciate it.
Thanks, bud.
Ladies and gentlemen, for those of you watching on YouTube or those of you listening on your favorite platform for a podcast, until the next time we meet, aim high.